Welcome everyone to a new educational video where I'm going to recap how I traded the pinpoint strategy on Mara on Friday. And for those who are not familiar with the pinpoint strategy, I'm going to explain it briefly. The pinpoint strategy is a strategy where you pin your entry as close as possible to the level of support or resistance, looking for a continuation that could happen based on a higher time frame. As you can think, or as you're guessing right now, the most difficult part about the pinpoint strategy is finding the right level. Out of so many levels, you need to be so right about finding the level that the stock is going to bounce from. You also need to be really accurate at predicting where the market is headed based on the higher time frame. And on Mara around here, you could see that on the daily chart, the stock was so bullish, and the previous day had a green day, or the previous day had a green or a bullish candle, which indicates to me that today, based on the trend that we had recently and based on how we closed on the previous day, we're more likely going to be headed to the long side. On the 60-minute chart, you can see that we're a little bit overextended, and because we're a little bit overextended, I would expect us to pull back before the continuation. Now the part that I need to do is try to guess where is going to be the low of this pullback before we bounce. And around here it was not that difficult. I tried to choose the 2480 because that was the previous day close. It's a really strong level, and along with that it coincided with the 20 moving average on the 60-minute chart, and the 20 moving average on the 60-minute chart is a strong moving average for me, especially when I'm looking for continuations or bounces. Finally, all I need to do is pay attention to the smaller time frames, which is the 1-minute chart and the 5-minute chart, and see how they are going to react around that particular level of support. If that level is holding, I can pin the entry as close as possible to the level of support with a really tight stop loss and aim for a higher move. So let's go to trading terminal replay feature and see how I executed this trade, and maybe what I could have done also better to make this trade better than it was. So there it is, the market is opening and the price is starting to drop right now. And look at this, even though we sold off in the pre-market, even though we're really weak after the market open, this does not necessarily mean that the stock is actually weak. It needed this pullback because on the 60-minute chart and on the higher time frame, the price is overextended. It needs to pull back before the continuation. And now what I'm doing is I'm paying this close attention to it to see how it's going to react around this 2480 area. Around here, sometimes it's really useful to pay attention to the time and sales. And you could see how the 2470, 2471, 2472 is holding for a long time. Now look, even though we broke the 2470, it's coming back up and it's starting to get bought back up. A lot of green on the tape means that there is a lot of buyers around here. Once I've confirmed that, and once I confirmed that the level is actually holding, I established my position to play it to the long side. Around here, you could have your stop loss either below the level, because that was a fake break and fake breaks can be ignored, or if you want to play it a little bit safer, you can put your stop loss at the low of the previous candle. Next thing what you could do is add to your position if it offers you a good place to add. You could see that unfortunately this stock rocketed to the upside without offering any pullback, without giving us a higher low to add. So what we do right now is we manage our risk according to our risk management system. Personally for me, when I played it at 2488, I put my stop loss at the level, which is basically 2480 or 2478. That's a 10-cent stop loss. And you could see that with this tight stop loss, 10-cent stop loss, and this reward, which is 50 cents reward, that's a 5-to-1 risk to reward ratio. That's already a good profit for day trading. Obviously, if you are risking, for example, $10 per share, you would be taking around 100 shares so that your risk is not more than $10 and your profit 5 times more than that, which is $50. If your risk is, let's say, $100 per share, then obviously you might want to take more shares, maybe let's say, I don't know, 1,000 shares around here. And this way, if the stock goes in your favor, you'll be making $500 while risking $100. Now look, this is a decent place to add. The price is going to the upside, it is pulling back, it's giving us a higher low. Now the level that's holding is the round psychological number, which is $25, and you could move your stop loss either to the low of the entry candle, or you could move it to your previous entry. Target closer to 2550ish, which is the round number, and it is also a small level that was held in the pre-market. So yeah, that's basically it. After that, you could either hold it maybe to the pre-market high, you could exit. It all depends on your risk management system. That's basically it. To trade the pinpoint strategy, the first thing you need to do is analyze the daily chart and make sure that you are guessing the direction correctly. Where are we more likely going to be headed today? After that, go to the 60-minute chart and try to find out or figure out whether you want to play a breakout or you want to play a pinpoint strategy, depending on how the 60-minute chart looks like. Once you've identified the levels that you want to play from, either a breakout or a pinpoint, you go to the smaller time frame, you see how the price reacts around the level that you picked, and you simply execute your trade and execute your entry. I hope you enjoyed this video. If you did, make sure to hit the like button, share and subscribe to our channel. Follow me on X if you want to see more of my trades, because I share a lot of pinpoint trades or strategies in there. I'll see you in the next video.